Hi, it's Michael back from Corona POS. I'm here today to talk about how small business owners can save some money and do it easily too. Too often we speak with small business owners who underestimate the importance of finding the best credit card processing agreement. Fractions of a percent might not seem like much on a contract you sign with a merchant service provider, but those pennies add up fast. For businesses that have a higher volume of business, they add up even faster, and those totals will significantly change your bottom line at the end of the year. Clearly, it's valuable for business owners to know how they can lower their retail credit card processing fees. On average, businesses pay a processing fee of 1.5 to 3.5% for each transaction. If your total annual sales are $500,000, for instance, a 2% rate comes to $10,000 a year in processing fees. With a 1.5% rate, the amount changes to $7,500, saving you a few thousand just by lowering your fee by 0.5%. Credit card processors know exactly how fast these fees will add up, and they're equally good at marketing their contracts in favorable terms. For example, Square lowered its rates in percentage, but added a 10-cent fee. For most businesses, this actually increased the total processing fee by a significant amount annually. So beware of exactly what you're signing up for and how much it will end up costing your business over each year. There are also some very easy ways to lower your retail processing fees. Use this money to grow your business instead of wasting it on extra fees and surcharges. But what are the factors that contribute to your overall processing fees? After all, few processors make this part clear. Simply put, there are a bunch. So let's summarize a few of the major contributors. First are assessment fees. These fees are set by the credit card company and vary slightly within each network. They're also typically slightly higher for credit transactions than debit. Assessment fees also include a fixed monthly network rate as a sort of subscription fee. Next, interchange fees. Your interchange rate is the vast majority of your total fee paid for each transaction. These vary the most and can actually be reduced, though never eliminated, by strict credit card policies. A few of the factors that determine interchange rates include card present or not present, high rewards cards, business or corporate cards, and keyed, swiped, or inserted transactions. These rates vary between networks, but oversight committees are cracking down on outrageous rates across the world. The EU recently issued broad caps on interchange rates set by major card networks. And finally, processor fees. The merchant service provider, of course, must also receive compensation for their role in this process. This rate varies between companies and can be negotiable based on transaction volume and business security or fraud protection measures. More on that in a minute, though. Okay, now let's jump into how you can actually lower your processing fees. First, look into the various types of processing plans. With some processors, merchants have options for different types of structured accounts. Not all credit card processing companies offer this, however. Go into negotiations with potential credit card processors armed with information on how the process works. They'll be more likely to offer favorable rates. Most simply is a flat rate option. Here, each transaction comes with a flat fee assigned beforehand. The fees will vary for different types of transactions, but will not vary over time. For instance, your contract might have slightly different rates between debit, credit, and keyed-in transactions, as I mentioned earlier. But these rates will stay the same for every transaction of that type. This type of account is simple to understand and great for businesses that don't have many transactions. For higher volume small businesses, look for alternative plans. Next is Interchange Plus, arguably the best account plan for the majority of businesses out there. Interchange Plus boasts more transparency than any other plan. The rate is broken down into the basic interchange rate based on the type of card being used and additional details on how the card was processed. The added details are there to show retailers exactly what they're paying for, enabling them to change store policy to lower their rates. Interchange Plus pricing is trickier to decipher, but does allow you to learn which factors will affect your rates. Lastly, tiered pricing does little to break down the fees. The various tiers combine interchange rates for different types of cards with the transaction type for one fee. The single fee makes it impossible to know exactly what factors contributed to that total fee. Moreover, this type of plan is difficult to negotiate and is the easiest way for processors to quietly raise rates in certain situations. These plans make the process simple, but none of them offer transparency that many retailers desire. There are many factors that go into your processing rate, and it's important to understand each piece if you want to lower your total credit card processing fees. Next, try negotiating. Remember that, just like you, credit card processing companies are also in the business of making money. Performing this service will never be free, of course, and it's also an absolutely essential operation for 99% of businesses. But that doesn't mean that you should overpay. While you want to minimize your operational costs, you also want to add value to the merchant service provider. One way to leverage this is to highlight your transaction volume. A higher volume will typically equate to a lower rate. Show evidence of annual growth with projected sales in future years. Third, if applicable, highlight the fact that you're at low risk for credit card fraud. It's important that every business take any precautionary measures to protect against retail fraud. That means staying up to date with trends in technology and making sure your business is equipped with the right POS software and technology. A portion of your processing fees is insurance of sorts, while the processor and issuing banks are taking the risks. So if you can show that your business is less at risk for fraudulent activity, processors will lower rates. Among other things, there are some easy ways to protect against fraud, including following all PCI compliance rules, requiring a CVV with every card not present purchase, keeping purchase histories for a long period of time, requiring signatures for delivered orders, entering zip codes for the billing address, avoiding key transactions, making return policies clear, and getting EMV card readers to eliminate all swipe transactions. Not only will lowering your chances of being the victim of retail fraud make your life far less stressful, it'll also save you money on your credit card processing fees. Fourth, set up an address verification service. AVS is a system that further reduces your risk of credit card fraud and chargebacks. This process simply verifies the cardholder's billing address with the issuing bank tied to that card. The address entered must match the address that the shopper's bank has on file, or the transaction will automatically be canceled. While this method is normally used for card not present transactions over an e-commerce channel, brick and mortar retailers sometimes also require it for in-store purchases. Most often, customers are only required to enter the billing zip code. The process is fast and simple, but adds yet another layer of important protections against fraud, thereby adding another reason for credit card processors to lower their rates. In fact, Visa has started incentivizing the use of AVS by lowering interchange rates for their merchants that use it. Fifth, enforce minimum purchase amounts of all credit and debit transactions. You see this across many retail stores for a reason, especially businesses that sell a high volume of low-cost goods. Here's why. Typically, your credit card processing fees come as a percent of each total sale. And typically, retailers who sell low-cost items are making only a slight profit of each sale. Markups are almost always lower on cheaper products. Therefore, even a slight decrease in profit can mean a sale went from making a profit to resulting in a loss. If your business thrives off small purchases, consider not accepting credit cards for any transaction under a certain amount, usually $5 or $10. And for the transaction in which you do accept credit cards, follow the other steps in this video to minimize your total percent going to processing fees. You'll see the difference at the end of the year. Some retail small businesses are now making up for their lost profits through their processing fees with credit card surcharges or convenience fees. Laws have loosened, allowing the burden of the processing cost to be passed on to the consumer. This can, however, mean a reduction in business, so it's usually a less than ideal situation. 6, make sure that your terminals and processing account are set up correctly. Talk to your point of sale software and hardware provider about how they operate with regards to sales processing. Many POS companies also operate as a merchant service provider. In these cases, it's important to figure out exactly what they charge for and how they break down their rates. Beware of contracts in these cases. Oftentimes, they won't lock you into a contract for their POS system, but will bind you to their processing system. This leaves you stranded even if you're unhappy with the retail software, and early termination comes with costly penalties. Others, like Corona POS, integrate with a variety of payment processors. In this case, check to see that your POS company can integrate with a processor of your choice and go from there. This leaves you with more freedom in your business operations. It also allows you to better negotiate a cheaper rate. When different companies are fighting for your business, you're more likely to get a friendly offer. Once you settle on a POS provider and credit card processor, set up each terminal with all necessary hardware. Most importantly, this includes modern payment terminals. Get credit card machines that accept EMV cards and mobile payments. Additionally, look for machines that are customizable. For instance, in order to protect against fraud, you want to be able to disable manual card entry or card swipes. Again, these raise your processing rates and leave your business on the hook for any fraudulent purchase. 7th, settle and batch all your transactions promptly. Merchants must settle or batch transactions after a certain time period. Batching your transactions means that you're consolidating a group of transactions that occurred over a certain time period and then submitting them to the bank to be processed. The money will then be withdrawn from the issuing bank and transferred to the receiving bank. In order to complete this, you must manually tell your POS system payment terminal to complete the task or set it up to be done automatically. Automatic batching is better since it can be timed to do each night and leaves less room for human error. Make sure that your point of sale can be set to complete batching automatically. Not only does it mean that you'll receive cash for your sales more quickly, but more frequent settling of credit cards will lower your processing rates. Finally, don't combine your processor with your point of sale provider, as I mentioned earlier. Many POS solutions also come with a processing agreement. While it's convenient to have these two major business operations merged into one service and price, it will almost certainly keep your processing rates higher than they need to be. Points of sale solutions that come with a processing agreement leave businesses with no choice for processing. The rates are fixed, and the lack of choice means that there is less room for negotiation. Moreover, they often keep businesses bound to long-term contracts through their processing services. The POS software may not come with any binding contract, but if the processing does, businesses are still stuck in an unfavorable position. Banks, too, cannot provide the lowest processing rates. Usually, banks will outsource the processing to third parties. Adding another cog in the wheel will undoubtedly mean higher prices. Keep it simple by working directly with your merchant service provider. For more information on credit card processing, POS systems, and the world of retail, subscribe to our channel and check out our blog. We never lock our customers into any long-term agreements, and everyone can use any processor of their choosing. Click the link in the description to learn more. Our team will even put together a credit card processing cost comparison for you so you can see what you'll save annually. Thanks for watching.